Today we are sharing a long-term analysis of Reliance. Reliance is forming a very complex structure, and let us discuss it in detail. Last time we had said that Reliance will fall and shared our analysis in a Telegram group, stock market for beginners. And you can see we had shared this chart of Reliance, that Reliance is forming a bearish divergence. As you see on the MACD, there was a bearish divergence and price was making a higher high, whereas MACD was making a lower low. And after that, you can see Reliance has fallen a lot. So this is how you simple analysis of using MACD and divergence you can trade. Now let us see what exactly why my prediction was saying that this was going down irrespective of the divergence. There was a reason for that. So watch this video carefully and at the end you will know why this fall was expected. Now, let us analyze this on a weekly basis and let us try to find the bigger picture. Now, if you see from this point to this point, if you see from this point to this point, Reliance was going up, and this is the impulsive up move. And after that, you can see first attempt to come down, and this was this followed by, if you see, one corrective structure and then one fall, and this can be labeled as the first move, first impulse to the downside. Now after this downside, you can see this upside. If you see this, let me clear it. This downside from this point came in two candles, 1 2, but uh, this upside, if you count 1 2 3 4 5th, so after 5 candles this upside was clear, which means this is not an impulsive move. I mean, sometimes it happens that 2 3 candles, if this I mean it can be impulsive, but you now you can see the difference is pretty huge, that 2 candles to down and 5 candles to up. And so at this time it means stock is making a bigger corrective structure and not a impulsive move, which means for this impulse now we will are getting a corrective structure, and then one more impulse will come at the later stage. So now let us try to find this corrective structure. Now from this part, this was the first move to the upside, and this is the first impulse. After this, you can see this is the first corrective structure, and then you can see this is another move up, this is another corrective structure, and this is another move up. Now at this moment you can see this clearly coming into the price strategy of this. So this is not an impulsive move, as this wave is directly coming in the price action of this. And this is one more possibility that I was thinking here is that this, whether this is an ending diagonal or not, in which price swiftly follows and breaks this. And because if you see closely on the MACD, there was continuous divergence. However, this price, in case of that, if that was the case, this price should be broken in 2 3 candles only. However, if you see, there are a lot of cluster of candles here, and still this price is not broken this point, which means this is not an ending diagonal. So we have to change our view for that. Now coming back to this point, this is the first impulse of correction, and this is the corrective pattern. Corrective patterns can be minimum 3 waves, and in this we got more than that. So after this, once we got the break of this trend line here, you can see the correction started. And now if you see this, for this the first move is this, and followed by, at this moment we are expecting a corrective structure, but we got another impulsive move and then another impulsive move, which means this is actually a very complex structure. But for this impulse to the down, we actually got one corrective structure here. So at this moment of time, if you get an impulse, then a corrective structure, then another impulse is you can count on. And that is the reason, if you go to the daily chart now, you see this, for at this moment there was a divergence, and this was an impulse, and this was a corrective structure. This is nothing but an expandable flat, and for this expandable flat you got the next move down. So now, as of now, it's not clear whether this structure is over or not. But then once this structure is over, we can get one impulsive move once this structure is over for this impulsive move, and then one more impulse down for this part. So as of now, this is the picture, but this is a very complex structure, and but this is a very slow structure as of now. And if you see the larger picture from last over 1 year, 2 year, the price action is very narrow. So we should avoid, as no clear setup is available, and these all are just prediction, because if this is an impulse, this all can be a corrective structure, and then one more push up can come, and then you can get another move down. So as of now, this bigger picture is not clear, but just the smaller pictures you have to be work on this chart. And as of now, you should avoid it, because since it is in a range, and we should avoid stocks that are in range. I hope this is clear, but overall, if you see, let me clear it. There can be one more possibility in higher time frame, that this is the impulse, and this all, if you see, this is the corrective structure, and this is another move down to complete this corrective pattern. And then for this impulse, you can get another impulse. However, for this structure, we should get an impulsive move here. And if you go to the monthly chart, this point is very important for that. If this point breaks first, and then depending on the structure, if you get a three wave corrective structure here, then possibility more downside will come. And if this is the completion of this structure, then you will get an impulse to the top, and you will not get a corrective structure here. So let the structure get complete, and then only I mean, try to find out what is a possible move upside or downside, depending on the structure, whether we get a three move structure or up move in form of impulse. So that is all. And if you have any doubts, please post them in comments, and have a nice day.